you. I need a hate to take it far, make moves. Had somebody trying to take it down, place fool. You just scoring mines, that's the bar.
All right, ladies and gentlemen, I got your watch list coming into February 11th, 2020. And not only do we have an awesome $300 into $5,000 free play, but this is a very important week. There is a lot of stuff packed in here that's going to happen tomorrow, Wednesday, Thursday, Friday, from economic reports to even Jerome Powell. So I'm going to give you guys a quick update on that. Then I'm going to give you guys a rundown of this play that we did. We did a ghetto spread on it. So we literally got paid $100 to take a $5,000 risk. That's our max reward, but we initially put down $280 to make the trade. So I want to go over that. That's an earnings play. I have a few other earnings plays I want to go over and other plays we made today. And then again, what we're watching for this week in terms of events and as well as plays. So let us get right into it. Make sure you guys are subscribed. Drop your thumbs up on the video. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing. We made all of these plays, even the one this morning. A lot of you guys have been following along with this play. You know, spoiler alert, it was an NVDA, whatever you want to call it. It was awesome, but there was a good strategy. So we're going to go over that, but we better see you there in the morning. All we ask is that you are positive and respectful. That's it. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any earnings plays? If you played in the videos, you have another remix, anything, post them below. We did do the random account again. We executed another play, this time from J-Ham. We bought a OTA, so that portfolio is actually doing pretty good. We're on week 3 of it, and we're looking for week 4 of the 1000%, baby. So we got that out the way. Let us begin with the main key. So again, I have the plays. Well, I'll get to that. We'll break it down, but this is the main things happening tomorrow and just this week. One, we had the Iowa caucus, you know, and that was that whole fiasco, but tomorrow is going to be the New Hampshire primary. Again, watch healthcare stocks. That's really what I'm looking for as far as Bernie and some of that other stuff. We saw kind of with Iowa, we saw a muted effect, so keep that in mind. But now you're seeing this kind of pick up, so keep a watch on certain industries and companies for how that's going to play out. But that is going to be one event you will probably get some headlines on. Then you're going to get Jerome Powell before Congress, so that's going to be tomorrow. Give or take, one of them is going to be in front of the House, and then one of them is going to be the next day in front of the Senate Banking Committee. They do these annual reviews, or I think it's like biannually, 2 times a year. But we're going to see Jerome Powell. This is definitely going to get eyes, and what people are going to be looking for is easing. And this is one thing. The market went up today, and it went up a little higher than I was expecting. I was expecting no more than 0.5%, considering what we saw globally with everything. And you know, we're going to talk about that here. But this is one thing to keep in mind. You know, why is it all these things are getting bad, or why is there all of these risks with the coronavirus and all this stuff? But why are stock markets all across the globe going up? In the weirdest sense, this may be, you know, especially if you're new, this isn't going to really make too much sense, but things are getting so bad, or if they do get bad, the market goes up, or the market likes it because it's pretty much going to confirm more stimulus. So this is, you know, why this relates to Jerome Powell. We want to see what he says with the coronavirus. They brought it up. It's like we saw with China and the rest of the world. They see China throwing money at the issue. Then that means that could be more stimulus for the UK, Japan, and all that. But people are looking at this positively because it means central bankers will support the market up if there is a problem, and that this would actually create a very favorable environment for investors in certain investments. So that's why you're kind of seeing this, but that's also why, too, what Powell says tomorrow will be very, very important. And even Wednesday as well, too, because it's going to be a 2-day event. But there's that. And then on Thursday and Friday, Thursday, you're going to get the United States CPI. Then you're going to get retail numbers for Q4. That should have some sort of effect, kind of seeing how we've been up at these all-time highs. Surprisingly, economic data has pushed the markets a little bit more than it usually has. So that will be interesting. But this made the markets move the last few months, especially coming into 2020. But you're going to get GDP numbers and some economic data from the United Kingdom tomorrow, but then the most important one was going to be Germany, which comes out on Friday. So end of this week is going to be interesting. We have more of this stuff playing out, but even today, why did the markets go up? What is everybody going to be looking at tomorrow? It is going to be on China's return to service in these factories opening. So this is what happened today. 10% of the Foxconn factories got opened back up today. This was bullish. You know, there was reports that these factories are opening, and again, we need to confirm confirm that. I'm saying watch even the oil markets and watch how the demand for oil could tell us about how this return to service and, you know, China's economy not shutting down, the price of oil will tell us. But now the question is, how long is the market going to take to come to a decision where they see what's happening and they're like, well, we think it's a return to service, or it looks like things are back or not, because there's no real way to confirm it. If you believe the official reports of the coronavirus from China, then you will believe their official reports of when they're going back to work. And if you don't believe it, then there you go. So that's why the question is, or what we're observing is how the market really digests this. And does the market say, yeah, factories are back to service, things will keep running up and doing well and holding up, but if not, then you might see things come down. But again, oil is going to tell us about this in detail, but watch the oil and SPY divergence. This is the chart that I brought up today. This is very important. I would keep your eyes on this. This right here is the S&P in purple, and the red and green is crude futures. But this is where I'm saying now, watch for this divergence. This is probably going to be the main thing to give us an idea of the demand and how the market is. There's going to be two things that's going to happen. Either oil is going to start ripping back up, and then the markets will take that, and you're going to see both oil and the SPY come up, or you're going to see a convergence between SPY and oil, and that is either going to happen through the SPY coming down and converging with oil at the low, or oil coming up and the SPY staying the same place. But this is a very big divergence, and even this is on the daily, the 1 year, but even keep it up throughout the daily today. You saw different moves, and you see how they're kind of flowing in part with each other. And this is what I'm saying, that could be an effect. But watch for these key, the divergence from, again, when the market or decides, you know, oil's right, or oil's going to decide that the market is right. So this is the main thing to watch. I talked about this in even the weekend video and last week, but this is something I'm going to keep up here. I have this chart saved, so we're going to be watching this during stream. You guys will hear me bring this up during the watch list as we see this, but it's what's going to happen from here and how it starts to move. That is what is going to be the key. Again, day by day and how long it takes, but this was the key that I said here today. You have about 3 or 4 days of diverging already from the market. So again, you're seeing the S&P go up, you're seeing these global economies, but even then, whether China's holding up or not, you're seeing oil start to slip up first. So if we break below this low here, that is going to be interesting, and that will even set us up for plays, but that will tell us too how the broader market is going to respond here. So that is pretty much it as far as that goes, but let us get into the plays. So this is now the main thing I want to go over is both this NVDA play, but before I do that, I'll talk about one again. If you haven't seen the ghetto spread videos, I would definitely check that out. Invented by the Colt 2019. This is how we get paid to make trades. So what I mean by that is by utilizing an advanced option strategy, you could be in a play with all an upside and zero risk, depending on how you structure it. So we call it the ghetto spread, but this was also one of the first plays we made today. We got the Shopify 620. And again, this is one I said to watch out for. Again, just how they've been on the daily with them coming into earnings. I really like what they're doing. So watch Shopify. But we grabbed this 620 this morning at like 185. It was a nice pickup. We were real early right there, man. It was a steal in the morning. It shot up and never really fell below $2, but then it even went up to 275. It closed at 235 or 240 on the bid. But now this 630 is available. So I didn't ghetto spread this. I was considering it, but you can now, since we bought this for $185 at 620 call, you could short the 631 for $2. We paid $185, get your money back, and still have $1,000 max reward. So that's a play right there. I am going to see on Shopify if it does dip, I might try to come back, but it's expensive. I only played the call side for now, so we'll see what happens on the downside if we're going to get that before earnings. But I'm keeping watch. They have earnings this week. That's going to be important. But now the main event, this was the play, and we actually were able to get a few different amounts back. Even though the main play is going to be like, because it has the least amount of risk, is going to be the $300 into 5,000 max gain. But we got a bunch of free contracts now. It wasn't as much, but now it's totaling almost about $1,000 of free contracts if you put it into perspective. And now seeing the opportunity of we're coming into earnings. NVIDIA has earnings. I love it for earnings. This is one I want to set up for. We have this one pretty much in the bag, I would say. Only thing is that if we get robbed by the market and it drops everything and this comes down, and I'm probably going to use some of this profit on the play to grab puts, But here's the breakdown I want to talk about. I want to go over the full play because this was a mix of averaging down and using balances. And now a lot of people, even with earnings, people have asked, is it now a good time to get into NVIDIA? Can you get it now? The point was these contracts we were in, we bought these January 22nd. So that was a few weeks ago. They went up and then they came down a lot. And these were pretty trashy contracts in the sense they weren't worth a lot and they had really low probability. They still are, but now it ran up a lot. You know, they went up $11 today. They have the earnings coming up. You see what the market's doing. So it's how we structured the average down and how I use the balances. But I say, if you want to get into it, it's all about controlling the balances. Now that we know the premiums are high, you could play it. You protect yourself with the small balance. If you put in 30, 40 bucks, you're more protected. Again, some people who bought this play when we did a few weeks ago, they sold out of it because we took a big position on it initially, but I was ready and willing to use that as a deposit to use more. So this is what I want to show you and how we played it. So here are all the plays and what happened. January 22nd with NVIDIA, we bought the February 21st 300 call in the morning. I got that for 37 cents. So this is what happened January 22nd. That's over here. I grabbed this one at 300 in the morning, and this is now to talk about balances. I bought this one for $30, and the whole idea was I went in small, started off, and again, this was after we hit the Intel. We already hit 1,000% on Intel. We said, okay, NVIDIA is going to report in a few weeks. Let's set up for this play. But now again, there was the chance of the premiums being high, so we scaled in with one position for $30. That went up, and then at the end of the day, I used that first position in a small amount of $30. And this is what I'm saying, whether you buy now or as you see through the past, you protect yourself, and your advantage is using a small amount of money protects you, and it gives you opportunity, or be ready and willing and prepared to balance whatever it is. Essentially, if you're going to put down a certain amount today and you're going to average down, make sure you could buy 5 to 10 times as much of the initial position at a later date before the earnings if you're trying to set up. So that's why if you put in a lot of money, which we ended up doing here, the more money you put in, the more risk you take. If you're, if you're not going to be willing to put more money down, or it's going to be easier to get shooken out of a larger amount. But what we did now throughout the day, as those contracts went up, we bought the 305s, and I don't know if you remember, I said this as a lesson. I used the 37s, I used the 300s as a place marker to let me know how much the 305s were up, and they were they only went up like 5-10%. So I said, okay, I'll go with roughly a $300 position. I bought 10 of those 305s for 28 cents, $280. But now, when do we average down? Take a look. We bought the 300s. They even went up that next 3 days. Then they dropped and they stayed down up until pretty much today. Or they kind of really just held the break-even price. And then even then, imagine the 305s. We bought those that same day. We got them 29-30 cents. They ended up shooting up to 60 cents. Remember that. But then they started coming down, and they were pretty much below where they were up until today. And now they're back up, and now they have the earnings for this week. So you're seeing what happened to the contracts. But this whole time, this is about 14 days since the 22nd. I didn't average down throughout here. You probably could have, but you're seeing how prices, they dropped, they leveled out. There's kind of an equilibrium price, but now it shot up. So this was the whole point, is that I waited now, and you could even see this was my first average down, and I even said it now on the stream alert. I wanted to get that for you. So you could see what happened here. You could see this was February 4th. NVIDIA had this news about getting into the online gaming. And again, I knew we already had those plays and we were down. So I used the 14th now to average down and get another play. But I even said it here, but not making my big average yet. So I knew that I wanted to make a big average because I was down on these and I put $300 in and I knew earnings. I said, okay, I have catalysts that could, justify me if I wanted to put more. But instead of, buying another $300 worth, I scaled in with another $30 because it was a shorter duration. I said, I want to make sure it covers earnings, but I want to get a better quality play and closer to the money than those 300. So I got that for 32 cents. And this is one we're still holding this one, and I made a move, and that one's now, you see here, $1.17. But we took that play, and that was February 4th. So again, first position, January 22nd. Waited here. It hit the low, kind of starting to bounce up there. This is for this contract. All of them will look a little different, but you're kind of getting a visual here. Did the first average down right here, but again, I still kept it small. And then now, let's fast forward here till Friday. This was the second one, and now again, I said in the last one, I was getting ready to go big. So this is what I did on Friday. I grabbed 40. Yes, 40. Again, I went big on there, and notice the amount 40 of the 320 March calls. So again, bigger amount. I got more time to keep it safer, but 40 contracts at $40 a pop, that's $1,600. If my first position's like 280, that's like 5.5 times larger than the initial position. Think 1 to 5 risk reward ratio, if you guys know kind of how I operate there. But I was able to buy a much larger position, and now watch exactly what I did back here. So it's these contracts right here. But again, let's do the math. $40 a contract, and we got 40 of them. That puts us in 1,600 flat. But I did this one, you could even see on the stream alert, it was a 20-minute flip. And I sold 33 of them at 49, or I believe I got 48. I think it was 48 to 49, and I didn't even get filled. I was trying to sell out 35. I got some filled at 48, some at 49, but you could even see the metrics. At 49, it does make a big difference off of the 1 penny. It's by like 30 bucks. We'll use 49 for example's sake, but I think the average was around 48. So even then here, for the sake of the ghetto spread, you could see what happened here. I spent $1,600, so now we sell 33 of them back at $49. You're left with $16.17. So again, you would be making $17 profit. If you got filled at 48, 33 times 48, it'd be $15.84. So instead of making $17, you'd be paying about $16, but now there's 7 free contracts. So keep that in mind. By selling 33 at this price, I got all of my initial investment back. I got the big amount back, but now I'm holding 7 free contracts. So then at the time now, 7 contracts times, 48 bucks, that was about $330 worth of value. Again, I did it instead of doing a ghetto spread or everything, and I haven't ghetto spreaded these. I now was able to get all my money back, but now I got 7 free of these March contracts. And then as you see here now, these are the contracts. That was $300 in free options, but now they're trading at $91 a pop. That's just about 700 bucks for free. And that's not including any of those other plays that we're up on. So it's great, but hopefully you're seeing the time I took and I spent between here and how I went, small, decently big, average down after, a week or two, even keeping it small. And then after, 2 or 3 averages, then we striked big. We set ourselves up when the contracts were still low. And then we took advantage of a big amount and a big opportunity. Risk management, got our money back, but now we're still in the game for earnings. And this is how we snipe that. But now what the result was today too, everything went up. So NVDA kept rocketing. I ghetto spreaded the 310s. So let's go back to those February 21st. Remember, these were the ones, and this is now the main play. We bought these 305s here. We got these at 28 cents and we had 10 of them. So now these are worth $700. But what I did, I sold these a little bit early in the day. And again, it's almost doubled in price, but I ghetto spreaded the 310s. So now we had 10 of these. We spent $280. They went up today. So instead of taking the profits because I wanted to play earnings, what I did was I ghetto spreaded the 310s. So I shorted these and I shorted 10 of them. Sold these for $390. We spent $280. I got $110 back. So again, I spent $280 on the 305s for 10 of them, but I sold 10 of the 310s for $390, got $110, and now we're still having the play, but now it's a $5 difference between the contracts. We have 10 contracts. That gives us a max gain of $5,000. So worst case scenario, if all of these contracts expire, NVIDIA drops on that 305 play, we're walking away with a guaranteed $110 profit. If earnings does great and it goes up and shoots past 310, we'll make around $5,000, give or take the difference of the spread, since you guys have got to learn how that works as well too. So that was the first one. So again, now you're seeing we got $110 extra cash. We're sitting on 7 of the free contracts from that from the big average down. This one still has a 5,000 max gain. We have no money on the table now for earnings. And then we can't forget, we still have the other plays too. So that was the first one I did. And then I've totally forgot I had the February 14th. I'm still holding the 305 or the 300. Remember, we only bought one of those for 30. So I'm just holding that there at 100. I could take that, get 200 bucks. I might even, I think I'm going to consider doing that, is probably selling this one before earnings and using whatever profit to pay for the put. But there's that. But then remember we also averaged here. This was our first average, the small one, but we got these 290. So I bought these for 30. They're trading for $1.20. I sold the 295 today for 60 cents. We bought these for 32. I made $30 net between these, and it has a $5 max reward. So again, if these contracts expire, that 290 will walk away with 100% profit, 30 bucks. We spent 30, but it has that max upside of $5 or 500 bucks. So that is your play and breakdown. Hopefully you get to learn something about timing, sniping, and how we go about it. But the key is controlling the budgets and how if you plan about how much money you have and set it up, and you don't really just throw it all at once, but really take advantage of the timing with options and earnings, and understand, smaller amounts for shorter expirations. If you're going to go average big, get a little bit more time, but there's a process to how you deploy the money, and you see how that could be advantageous in protecting you from not having the best timing or anything that happens. So there's that, but everything else, man, watch all these. I've not got to set up my Caterpillar play. I'm still going to be watching that. Hopefully we could set it up around Wednesday or Thursday. I think at least before the German economic numbers will be good. SCO, watch this, inverse to oil. I don't like them yet, but keep an eye out on this. I wanted to keep your guys' exposure here so you could actually know. This is like a UVXY for oil, but I'm going to be keeping my eyes on how they play out. It's hard to play on the options. Watch Amazon. There was reports that they're stockpiling stuff from China for the coronavirus. I didn't think about it, but they have a lot of exposure here to China. But too, they're also breaking out kind of like Microsoft. And now those options we got, remember those puts, they didn't go down a lot, but Microsoft hit another 52-week high. I was saying both ways this one could be good, a little contradicting, right? But that was the opportunity. So the puts are still holding up. I still like those puts a lot, especially the March ones. The February ones got crushed, so I would definitely look towards March, and they're holding value for a reason. But I also want to see, when we could get an opportunity. I might have to average down on more puts. Watch how I play Microsoft like NVIDIA, but then I also want to see how we could set ourselves up with calls. But the calls are now getting real expensive. And then watch AMAT. That's one of the other earnings plays I want to set up for this week. I didn't think it would run up like this towards the end of the day, but it did. So be careful with that. Then watch TLT. They had an extraordinary bounce after that ex-dividend. I think a lot of people are missing this. You don't really see TLT move like that. And when it does, and if it breaks out from here instead of goes down, the bond market is screaming. So watch out for that. Watch Lulu. They haven't reported today, but they're one of those that kind of been showing resiliency. I want to keep an eye out for them. And again, retail numbers on the way. Then HD, we have that one play that we got last week. Those depreciated a little bit, but then they started coming up. HD 52-week highs. This is an important level. If it breaks out from here, like I said, it's either going to be this week or next week, but maybe it alternates. But McDonald's and Home Depot, both of those are getting primed to move. Then watch UNH. Again, both of these two, I either want more HD calls or I'm looking for a UNH call. And again, we already have some more time on the UNH puts, but watch them even coming into this New Hampshire stuff and all the elections. Watch AbiVi. They've been killing it, but watch $98, $99 for them. That's kind of a resistance if it goes above 100. Again, now too, any company mentioning some of this coronavirus, they've kind of lost steam, but AbiVi is held up. So that has my attention. I'd keep my eye out for that. Then watch Biogen too. They're kind of back to our levels a little bit. They're still holding up. It's just kind of being slow, but I think really any day now. So let's keep an eye for that. If the premiums are cheap, maybe we could see if we could do another cheap spread. But finally, too, watch out for continuations. That's why I have this up here and a few other companies. Watch Qualcomm. Again, we have NVIDIA and all that. The chips are at an interesting level, but I'm more interested in how it reacts post earnings. Again, we saw that with Qualcomm. Watch them. Even when I'm interested in Google, we lost on that Condor last week. It made a big move here today, but this is still a post earnings. I want to watch it, and I'm still holding that other Condor for this week. It's most likely going to lose. I like that it's still, again, if it drops 70 bucks from here, if there is a big week, the time benefits you, believe it or not. But it's definitely losing probability now, but a way to average that down could just be selling a naked credit spread, meaning instead of doing an iron condor and going both ways, you just do a credit spread on the call side. And you could sell some in the money, get that credit. If it drops enough, you should be able to profit. That's, again, the reason why that would be a play is the same reason why we're losing on the Condor. Essentially, you could just get the Condor without the put side. But I'm going to be keeping those. I'm not too worried. Again, we took the max risk right when we made the trade, so we kind of knew what was happening. We balanced the books with that. But then watch Disney. They're at an interesting spot, kind of just right still in between Disney Plus and last earnings and all that. But if they are going to have a continuation, it'll be big. But watch just any of these companies, again, earnings continuation, we really can't forget about that. And then watch travel and all those stuff. But we'll see. We'll see what happens. There's going to be a lot of live news and all that tomorrow. So I hope you guys are ready. But that is your watch list, ladies and gentlemen. Make sure you hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep it positive and respectful. Head in the game. Balance the books. Get ready for earnings. Don't force it. Risk management. Understand the ghetto spreads. Understand all spreads. Get used to every single tool in the toolbox, baby. Don't rush it. Don't force it. You could miss 1 week. You'll get the next week. There's a week after that, and a week after that, and a week after that, and a week after that. You got to get your head in the game, baby. Everything is going to be a contradiction. Contradiction does not mean impossible. It just means opposing ideas. You got to learn to jug and finesse and get through it, baby. The coat got you. Just take it easy. Control the balances. You have strength in small balances at first. Let the timing come to you. Don't go big off your first impulse. Oh, y'all don't feel me, though, man. It's okay. We're going to get it, though. We're going to kill earnings. Stay blessed. Go stick up for somebody this month as we requested, and keep it culty, man. The code loves you, baby. Let's go!